Welcome back, accounting boffins. Yes, you can actually feel the vibe in the lesson because we're doing adjustments which are critical for your understanding of your financial statements. Once you master the adjustments, you will enjoy doing the financial statements. Right, let's go right into the adjustment, which says here, the business sells plastic bags to its customers at 50 cents each. The profit or loss on sale of plastic bags reflects the following. 1. Cost of plastic bags that we purchased, 51,200. Cash received from the sale of plastic bags, 56,600. Now, we are also told, and I think the examiners were quite kind in this one here, telling you that the reversal of the stock on hand at the beginning of the year was 5,700. Now remember what we said. Whenever you are dealing with any adjustment, the first thing that you do is go and check in your balance sheet account section if any of the big 5 appear. What am I referring to? Accrued income, deferred income, prepaid expenses, accrued expenses, and consumable stores on hand. Right. In this case here, they told you the reversal had to be taken into consideration. But look at it here. You can see here, stock on hand of plastic bags. There we go, 5,700. So even if you were not told about it, this is something that you have to pick up from yourself, that there should have not been a reversal in my balance sheet account section. Therefore, I now have to do the reversal, right? What's my reversal? Watch here. So I start off by saying 5,700. What was that? My reversal. So let me mark it with an R so you know what that is. Right. What else do I know? I purchased, where we go, I bought goods, or the bags bought on credit was 12,800. So therefore, watch my calculation. There's my plus 12,800. Let's mark that as the credit plastic bags that we bought, right? What else do we know? We know that we purchased on cash 51,200. Therefore, there's my 51,200. That will be my cash purchases of my plastic bags. And what else am I told with regards to my plastic bags? Let's see what we have here. I'm told that, here's it, the cash received from the sale of plastic bags was 56,600. Therefore, in my calculation, minus 56,600. I'm going to explain that just now. Let me show you what we're doing here. Obviously, what you're doing here is a trading account for your plastic bags. So you start off with the 5,700, which was your reversal. Then you bought for cash 51,200. You bought on credit 12,800. You sold for 56,600. And there was something else we were told. We were told the stock on hand at the end of the year was 3,600. Therefore, 3,600. Watch. I want you to relate the account with the calculation. Watch. 5,700. You're adding 51,200. You're adding the 12,800. Why? All on the same side. Minus the 56,600 because it's on the opposite side of your account, minus your closing stock, which is on the opposite side. And you will notice here that you have a loss of 9,500, meaning you're crediting this account with 9,500, and obviously you're going to debit a loss on sale of plastic bags of 9,500. Now, what has this adjustment done? This adjustment is testing your knowledge of the periodic inventory system. Can you see how the examiners are testing your knowledge of the periodic inventory system in adjustments, but relating it to the plastic bags that the business sells to its customers? So once again, opening stock plus purchases, look for returns, less your closing stock, less your sales. There we go. There we have our loss on sale and this then gives us our loss on our plastic bags. Right, we move on now to the next adjustment, which is salaries and wages. Okay, what are we told? One employee was omitted from the salaries journal for December 2020. The salary details are as follows. Net salary was 46,000, employer contributions was 9,800, and the deductions was 14,500. Now, what do we know from salaries? Net salary plus deductions gives me my gross salary. Okay, I repeat, net salary plus deductions gives me my gross salary. Stated in other words, gross salary minus deductions gives me net salary. Okay, so what figure am I looking for? I'm looking for my gross salary, the total salary that was due to my employee. So what is it? It's the net salary plus my deductions. Watch. So what do we do here? We take our figure here, which is 46,000, right? Plus the 14,500, and that will give you a figure of 60,500. So therefore, if you take your salaries and wages of 175,000 as your starting point, there's your 175,000, add your net salary plus your deductions. So in other words, that is your gross salary, right? Okay, now, very often you find some businesses including the employer's contribution as part of salaries and wages, like I've done here. Okay, what have I done? This is a standalone expense, namely the employer's contribution. What is this here? These are the perks that we give to our employees. Yes, it's an expense to the business. Therefore, employer's contribution is an expense. Understand that. Sometimes it is shown as part and parcel of salaries and wages, and sometimes it is shown as a separate amount. I'm going to show you both methods here. Watch. In this case here, it's added as part of salaries and wages, but you could have a situation where you are told, show your employer's contribution as a separate item. Therefore, you would have employer's contributions as a standalone 9,800. Okay, now remember, these are two separate scenarios, and I'm going to explain them both to you as we go along. The first one is the one that the question asked for, where the employer's contribution was part of my salaries and wages. As you can see, there's the 9,800 included in salaries and wages, therefore giving you a figure of 245,300. However, if you had a situation where the employer's contribution was a standalone expense, it happens in some questions. You'll see employer's contributions as a standalone expense. In that case, you would then add the 9,800 to your employer's contribution. The effect is the same, but sometimes for reporting purposes, and this is important for us in accounting, sometimes a business wants to know what are my expenses in relation to my employee benefits. Then obviously they'd keep a separate account called employer's contribution. Whereas if it's part of salaries and wages, it's difficult to find to find the actual amount. What was my employer's contribution? As you can see, the total expense is 245,300, but the employer's contribution is only the 9,800. Okay, so therefore, depending on the needs of the business, they would then decide. Okay, this was a bit of an ethics question, which says here, take note that equipment with a cost price of 18,000 and a carrying value of 12,000 on the first day. Remember, we've done this one here, right? And we had another partner, Joe Mathibi, who has complained that Tim Lowe has acted unethically in taking over the computer for 4,000 Rand. Tim disagrees. Right. So obviously we have a scenario here now where the one partner is saying you shouldn't have done it, and the other partners agree. It says no, it was fine, no problem. It was hunky-dory. Let's look at what our responses are. Our question says, give one opinion to support Joe and give one opinion to support Tim. Here we go. Let's start with Joe first. Tim is benefiting from a very low charge on an asset that is worth a lot more to the company, and hence the partners are losing as a result of this transaction. A large loss was made on this disposal. So therefore, you can see what we are saying, that I showed you that the carrying value was in the region of 10,000 Rand, and it was taken over at 4,000 Rand, if memory serves me correct. So obviously, there are also tax implications. There are also tax implications for this year, as the partner should be paying tax on this perk. The transaction was not transparent. No discussion or disclosure on the disposal in advance. The asset was still of use to the company, and the partner had no right to take it. So all these answers that we are giving are in support of Joe. However, there's also another opinion, and let's look at that one. The computer is already more than 3 years old, right? And it has a relatively short lifespan. That's true. Think about it. Although you may be using your computers for a longer period, but generally, your lifespan of your computer is 3 years. Why is it 3 years? As a general question, generally you find with technological advances, within 3 years, the computer becomes outdated, right? So therefore, general lifespan, 3 years. Okay, the computer is outdated, as I mentioned. It will probably not be upgradable. That means you can't upgrade it because obviously now there's new technology on the market. The depreciation at 15% on carrying value for computers is unrealistic and should therefore have had a lower carrying value. Definitely true. So obviously, if you wanted your computer to last for 3 years, in our records, we should have been writing of depreciation at plus minus 33.33% per annum. So therefore, if you do that and you write off over a period of 3 years, at the end of 3 years, the computer will now be reaching its carrying value of the 1 Rand. And you must remember, we've dealt with the 1 Rand depreciation in our other lessons. Okay guys, so what have we done? We've shown you how you do your adjustments and how you then use the information from your adjustments, showing your calculations on your statement of comprehensive income. Once you've done with that, your statement is completed and you are ready to hand it in and start with the next question. So guys, once again, important, show your calculations, work in such a process that you show all your adjustments, start off with the figures that are given to you in your statement of comprehensive income, in your bracket, that's your starting figure, do your operation. Now remember, again, is it a plus, is it a minus, depending on the adjustment. Then have your final figure, and in that way, you're going to ace the income statement. From me, Ashraf Patel and the team, keep your feet on the ground, reach for the stars, because you definitely are an accounting shining star. Until next time, be good.